Right now, we're buying 3 times the current production. That'll turn to 6 times the current production. But here's the problem. That's only 6 times current production if the miners actually sell. But a couple of the miners actually were buying. I mean, literally, not only were they not selling to pay their electric bills, they were actually in the market buying. Now, that can't happen forever, but that's just a speculative move, people adding to their treasury because they anticipate this move. And
get ready for an in-depth exploration of the current state of the Bitcoin space, which has undergone a remarkable transformation after weeks of widespread fear, uncertainty, and doubt triggered by the recent GBTC sell-off. Prepare yourself for an exploration of the remarkable events that have transpired, leading to a revitalized feeling of hope among investors. Within this dynamic market, Bitcoin has risen to an extraordinary peak of over $48,000 per coin, which is a significant 12% gain over the last 5 days, an astounding 64% increase over the last 6 months, and a noteworthy 12.62% increase over the last year. The S&P index, which is presently at all-time highs, increased more cautiously by 21.50% in a year and 12.60% in 6 months, in contrast to this rise in the conventional financial markets. In this week's podcast, we provide to you first-hand knowledge from seasoned macro specialist Mark Yusko, as he discussed in his weekly roundup with Blockworks. In the weeks before the 2024 halving, Yusko highlights how important these milestones are and discusses what they could mean for the price of Bitcoin. Mark believes that things are about to get even wilder as we travel through the wild waves of the cryptocurrency market. As the April halving draws near, there is growing anticipation and a general expectation of complete chaos following the highly anticipated event. Keep watching as we break down the nuances of the present crypto scene and provide a thorough summary of Yusko's conversation with Mike Polito of Blockworks. We encourage you to show your support by liking and sharing this video, subscribing to our channel, and turning on post notifications to stay informed about future content. Now let's hear what Mark Yusko has to say next.
Not the 2 best starts of 2024. Not the 2 best starts the last 5 years. Not the 2 best starts of commodity ETFs. Not the 2 best starts of ETFs run by the largest institutions in the world. 2 of the best starts of all ETFs. This is simply a supply and demand story. And look, we talked about this for months leading up to the eventual approval, which we nailed, by the way. I mean, we were off by 2 days, 3 days, but we nailed it. And I think what people just haven't internalized is it's this 2-step process, right? Is we had the demand shock, which is this Saylor-esque appetite, but not a one-time. I mean, Michael was like a one-time chomp, and then he'd digest, and then he'd chomp, and then he'd digest, kind of like a dinosaur, or, python. And this is more of, I don't know what the most voracious jungle cat is that, is eating and hunting, not daily, but weekly. I mean, this is going to go on for a very long time because of the resistance from the powers that be, right? Everyone who aligns with the Warren clan said, nope, that's not welcome here. Those new ETFs, they're not welcome here. And one by one, over time, that's going to fall, and it's going to increase the amount of capital that's trying to squish through the gate. The 4-year cycle exists because of the halving cycle. And the halving cycle is hard-coded. That is not going away. And the supply, so we had the demand shock. That was what I was saying. We had the demand shock, right? We got the approval of these things, so the average person can now start buying. It's now a 1%, actually 1 to 3% allocation in the Fidelity broad portfolio. So they have they have an ETF that is all their other ETFs allocated based on their strategic view, and they have a 1 to 3% weighting and a 1% position in FBTC. Price rises, and that's what we're seeing. But now we're about to have a supply shock, and a supply shock guaranteed, whether it's 417, 418, people are wishing it's 420. It doesn't really matter what day it is. It's happening. And we're going to go from 900 a day to 450 a day. And at the amount of inflows, that's happening right now, we're buying 3 times the current production. that'll turn to 6 times the current production. But here's the problem. That's only 6 times current production if the miners actually sell. But a couple of the miners actually were buying. I mean, literally, not only were they not selling to pay their electric bills, they were actually in the market buying. Now, that can't happen forever, but that's just a speculative move, people adding to their treasury because they anticipate this move. And, the other thing that doesn't get enough conversation is this idea of treasuries, right? You have MicroStrategy, clearly the biggest part of his treasury. He's basically turned himself into a Bitcoin bank. But other companies have quietly added to, Morgan Creek has Bitcoin on our balance sheet. Now, we're not like Saylor, we have it.
As Mark Yusko delved into the most recent interview between Tucker Carlson and Russian President Vladimir Putin, our fascinating debate took an interesting turn. With almost 200 million views on Twitter and more than 12 million views on YouTube, this interview has gone viral. Putin spoke on a variety of subjects, but he focused especially on how the US dollar was losing its position as the world's reserve currency. Putin presented a convincing argument, pointing out a crucial area where he believes the U.S. political establishment frequently makes mistakes. He characterized the U.S. political leadership's tendency to weaponize the dollar for foreign policy goals as one of their worst strategic errors and voiced concerns about it. Putin claims that the U.S. dollar is the cornerstone of U.S. power and that it is the main tool used to maintain U.S. influence across the world. But he issued a warning. Using the dollar as a weapon in political conflict weakens it and diminishes American influence. Putin was very clear in calling this strategy stupid and a grave mistake. He also noted how the U.S. allies are being affected, pointing out that they are steadily decreasing their dollar holdings in an attempt to avoid suffering the same fate as Russia. Putin shockingly revealed that, although still accounting for almost 80% of Russia's international commerce, just 133% of transactions are now made in U.S. dollars and euros. He went on to point out that transactions increased from 3% to over 34% in favor of Chinese yuan. Returning to Mark Yusko's perceptive interview, he expressed worries that Putin had expressed, highlighting the dollar's weaponization and criticizing the corruption and incompetence of the U.S. political establishment. The discussion over the U.S. dollar's place in world geopolitics and the possible consequences of using it as a political leverage weapon is made more interesting by Mark's analysis. Let's hear what Mark Yusko has to say next.
This is actually part of what Putin was saying in the interview. When you weaponize the dollar, right, by sanctions, you force the people who are being weaponized against, who are being sanctioned. By the way, I love that you called it Twitter. Thank you. Don't call it X, call it Twitter. But my point there is, what he says is he gave the numbers. He said 5 years, I think it was 5 years ago. 5 years ago, 3% of our trade was in yuan and 34% was in dollars for Russia. Today, 13% of our trade is in dollars and 34% is in yuan. So who's gaining economic power, right? If we believe the world reserve currency, kind of 1971 petrodollar standard, if we believe that, which I think we should because there's a lot of evidence to support it, that's being weakened by the policymakers' decisions to sanction and force these other countries. Like if you look at Iranian oil production, pre-sanction, post-sanction, straight line up. Well, why? They're going to find a way to sell their oil someplace else. Is the U.S. really aligned with the principles of freedom? Taxation, inflation, is that freedom?
I mean, what country right now doesn't have taxation?
I'm just saying, is the suppression of, swath of people through the systematic theft of their wealth through inflation. Like you said it. Inflation is a choice. From 1776, the founding of the Republic, to 1913, there was no inflation. There was no systematic inflation in the United States. My only point there is a class system. There is a group of people that are making decisions that have significant and severe economic consequences for a very large number of people. Take the lockdowns. That was the greatest transfer of economic wealth in the history of mankind, from the masses to a very small number of people. $3.7 trillion went to the, and I don't like the term the billionaire class, but that's who it went to. Even Ms. Yellen said the word unsustainable. And she's the one of the biggest problems. And we're on an unsustainable path. And I don't know how you feel, but I know how I feel when I watch our leadership talk about economic decisions. I don't feel good about it. And when I see the impact that it has, right, when I see the CEO of McDonald's say that on their own data, households under 45,000 are no longer going to McDonald's because they can't afford it. He actually said that out loud on a recorded line. He said they're being forced to cook at home because a Big Mac meal costs $18 in some places.
In this clip, Mark Yusko discusses a significant issue that Vladimir Putin brought up in a recent interview concerning the U.S. currency being turned into a weapon through sanctions. Mark agrees with Putin's assessment, emphasizing that the U.S.'s sanctions unintentionally force the targeted nations to look for other currencies. Yusko provides statistical information on Russia's trade patterns, which strengthens Putin's position. He points out that throughout the previous 5 years, the proportion of Russia's commerce in dollars has stayed at 34%. While the percentage of transactions made in yuan has increased significantly, from 3% to 133%. The main focus of Mark's argument is how these sanctions would affect the US dollar's standing as the global reserve currency. He reaffirms the idea of the 1971 established petrodollar standard and warns that such measures might impair its reputation internationally. Mark criticizes the US's compliance with freedom ideals in general and the effects of taxation and inflation in particular. He adds historical context to the conversation by pointing out that from the country's inception in 1776 until 1913, there was no systematic inflation in the U.S. Yusko used the COVID-19 lockdowns as an example of his concerns about the economic policies made by the present administration, calling it the largest wealth transfer in history. He emphasizes the disproportionate benefits to a small group and questions whether these outcomes are intentional or unintentional, drawing parallels to historical dictatorial strategies. Essentially, Mark Yusko offers an accessible but powerful analysis, tying Putin's observations to the possible effects of economic actions on the general public and posing important queries regarding motivations behind the scenes. Until next time, happy investing.